Hi guys, so yeah, welcome to the weekly fundamental video. Yeah, so we're going to start off because I haven't shown you my difference indicators in a week or so. I've been a bit ill and it looks like the markets have been ill with me, and it's kind of been raining as well, so it's kind of like, yeah, that kind of week. But yeah, this has been the difference. This was Monday. This was last Friday. Closed out a trade on this Monday here. Just a bit higher than here, actually. I think it was around here. So literally no difference. To take out trades, I use a normal distribution, and to put it simply, this is just the midpoint here, which is why I put it there, because I think I took out a trade at -11, but I was aiming for -12, and yeah, we got it just a bit above, so that was all good. And as you can see, look, the S&P 500 and UK 100, the difference between the two got larger, went down. So the UK 100 got further below the S&P 500, quite well, to -50. It's quite a big move over 3 days. Well, yeah, 3 days, but not a major difference overall on its own, -50. But yeah, over 3 days it was big, and obviously there was big moves in that. And then we came back together. But as things started to rebalance. So yeah, that's the S&P 500 and UK 100. Yeah, this is the journey, the S&P 500. Monday again, Sunday today, Friday. Yeah, so they were pretty much in tandem. But look, bang, the JER has stayed a lot stronger this week than the S&P 500 has. We'll discuss some of the reasons why that is when we look at the actual markets, how they move this week. But there's more kind of buying potential, if you like, on the JER 30 than on the S&P 500. Having said, there's a lot of buying potential around at the moment, I'm thinking anyway, but we'll get onto that later. But the JER's just generally stronger at the moment, just like ECB, monetary policy, all that kind of jazz. We'll get onto it and we'll look at it. So as you can see, we've made a bit of a U shape on the S&P 500 UK 100, making this week slightly non-change. Yeah, stayed like that. JER, S&P 500. Yeah, JER stronger, higher. So yeah, let's look at why. Yeah, so I'm gonna flick that up for you now. Yeah, so this is just a chart of the S&P 500. We've got daily. I usually write scripts for these videos, I have to say first, but I've been quite ill, well, fairly ill, like a touch ill, and so it's not as formative as in depth as it usually is. But you know, I feel that is the script in a way. I feel with all weeks to get ill and put off work, this was a very good one. Because look at the S&P 500, just down, straight down. Why is it all the way straight down? China, yeah, China pretty much. Yeah, I mean, just to tell you a bit about this sell-off, overall 2.3 trillion was wiped off of global stock markets. That kind of gives you a rough figure behind the move. A lot of money being lost, a lot of money being made as well. If you're shorting this down, you're doing bloody well, very well. Sorry. Yeah, it was all good, except if you're on the other side, which was bad. Yeah, and it was China. It was sparked by the PMIs, really. PMIs, they're an interesting one. They kind of like, they build up momentum, I think, will build up strength. If they're consistently and consecutively like weak, then each and every single one doesn't really do much, but then suddenly, bang, you get another one that's weak, and you get something like this. Huge move down. Big stuff. And yeah, this was really, it was trying to really dominating stuff this week. I say it was the PMIs. There was also other factors. You got to remember the renminbi, or that's the onshore one. What I'm going to put up here is the onshore. If you know, there's two different currencies in China, because that's the way they like to do things. And as you can see, look, the Chinese currency has got a lot weaker. This is USD CHN. If you don't know, obviously, this shows it going up shows USD strengthening, going down CNH strengthening. But yeah, as you can see, getting weaker. This is a managed currency. What I mean by that is it's state kind of controlled. So Chinese set fixing rate, and then they only really let it deviate around that point, and they say it every day. As you can see, it's been set consistently weaker, a bit stronger on Thursday. I think it was set a bit stronger on the Friday as well, but yeah, I mean it was, yeah. But here's Monday. This was key. That was not Monday. That was Monday. How could that be Monday? That was Monday. Yep, that's Monday. This was key because the Chinese introduced circuit breakers. If you've heard about these, they're basically an idea to stop like huge selling. If I bring up the S&P, unfortunately I don't have a chart of the Shanghai index. It's not available. But if you look here, this sell-off was sparked by very similar things. Just to make it a generalized point or generalized variable, it was fear of a China economy and potential recession, if not marginally already in recession, possibly. Down. Yeah. In response to this, Chinese state thought they need to control it. They don't like not controlling stuff, so to speak. Fell, and so they put in these circuit breakers. And the idea, if we just pretend that this is the Shanghai index, the idea is that if it falls, let's just say that amount, they close the stock market, so it can't fall that much more. You see what I mean? So on here, fell that much, circuit breakers come in, couldn't sell anymore. First day they were introduced, Monday, they hit quite quickly. Not as quickly as the second time they were hit though. And that was on Thursday. This day here, see this massive downness. That was because, yeah, the circuit breakers got hit within 29 minutes of the market opening. So the market opened, sold off. To hit this circuit breakers and to make the circuit breakers work, the stock market has to sell off by 7%. Yeah, sold off 7%, and then yeah, it was all over for the day. 29 minutes work. If you're short in China, that would have been, well, I say it would have been a good day, because you would have just nabbed 7% in 29 minutes. But you're also probably going to get arrested. So another balance there, all imbalance. Yeah, oh yeah, and one other to add about the circuit breakers, another piece of information is that they close markets for 15 minutes after it falls 5%. So it falls 5%. So let's just say 5% is X amount, or this amount here, up to this 1.382 fib I've got drawn on here. I'm not sure. I won't remove that fib. That's something else. But imagine that's 5%. Imagine that's 7%. I know this is completely hypothetical, but sells off down here to 5%. Closed for 15 minutes, then goes to 7%, and it's closed for the day. That happened both on Thursday and Monday, basically. And that's why you got these huge moves. This, what was it again? 2-point-something trillion wiped off markets. Yeah, huge amount. bang. That's really what controlled markets this week. I mean, it was across the board. UK 100, you know, just straight down. And you can see here, like, see how it just moves with no candlestick there. That shows you, what that shows you is that it's overnight for the FTSE, because the UK 100, this UK 100 is closed overnight. So it's telling you that there's something going on while the UK 100 is closed to cause it to fall so much, and then it's just getting continuation. Look, Thursday, bang, because we had the circuit breakers. This would have been during Wednesday to Thursday morning. If you're in England, that would have been when you were sleeping. It would have been as well if you were in America. Yeah, it's huge. The circuit breakers got hit, and while everyone was sleeping in England, this just fell. No one could trade this either. Well, you could trade it on currencies and so on and so forth, but on this UK 100 you can trade it, and it just fell hugely. Bang. But obviously this was a market-wide move. You know, it's the same on the JER. You know, this is real emphasis of why you use something like a correlation to hedge or something, because although, you know, you might have long this, you wouldn't come out too badly actually. On the UK 100 you will not anyway. On the JER you would probably come out quite badly. But yeah, look out, big. Yeah, but as we said, the JER stays stronger. If to prove that point, look here, the JER's there, and that's the mean there, and that's one standard deviation, 1 Bollinger Band. That's key, 1 Bollinger Band, key. Ready? SPX 500, 75 mean, 1, 2 Bollinger Bands. SPX was hit much harder than the JER. Why wasn't the JER hit so hard? Well, pretty much ECB doing stimulus, a lot of stimulus. I know it disappointed markets previously, but if you're a bull and you like buying stocks, you're probably quite happy that, you know, they did do something now, because it's kept this slightly stronger. You probably would have hoped you didn't switch back into America, which some people did. But yeah, you also had data out which helped keep this stronger. Tuesday, you had unemployment change in Germany. It stayed pretty much the same. If you had 14,000 less more employed people, sorry. So, and that was better expected. Expected was 7,000 more people employed. That's quite good. It's very good. It's better than expected. It's twice the expectations, being that 14,000 is twice 7,000, with 14,000 being more the amount of people who've got jobs. So that's good. That was out on Tuesday. Inflation, good, and I think, well, not good really. It's 0.2%. It's coming back. Positive signs. Is it good? No, probably not as an integer on its own, but yeah, not as bad as China though. That's really bad. Inflation's not so bad in China. There's a world of problem, isn't it? Problems even. Yeah, and pretty much sums up the data. American data was slightly weak. I think this week, except for Friday, of course. But like the ISM manufacturing was weak, 48.2 compared to 49. That was on the Monday as well. Go back to the S&P 500 Monday. It's down. By the way, I do realise this video is a bit haphazard, and I do apologise if that's slightly confusing. But yeah, man, it's just been rough. Yes, but yeah, so that was not going to help the Koreans. Wednesday, balance of trade came out. It's there. Better than expected. Once again, China still just taking over. Yeah. Something, yeah. ISM non-manufacturing, bit weak. Yeah, PMIs seem to be weak all around really. That was ISM non-firm manufacturing PMI 55.3, 56. I don't like weak PMIs. It kind of scares me, to be honest. It is. I think it's quite a bearish signal. That's kind of my opinion. People prefer more chunky data, like the FOMC minutes we had this week. Like, I don't know, balance of trades and stuff, like more kind of chunky, if you like. But I like PMIs. I think they're good guides. But they can cause a real move when they are taken the wrong way. Like here, like we saw, big move down. Yeah, and that's the data. There was lots of other data, but on Friday was the core data. As you can see on this, look, we had strength. Hey, why do we have strength? US non-farm payrolls, which is an employment figure for the states. 292,000. Impressive. Like, that's a lot of people. In 1 month. That's for December. Yeah, it led to a lot of strength. If we just cut this down to an hourly, strongly up. You know what I mean? It's really strong. But that wasn't there. It was like here. You know, so it's here. Strongly up. When it took out. Up here. Couldn't really, well, made a new high against it, but that was the high for the day. You see what I mean? But no, I say the high for the week, but it couldn't hold the ground. It just lost it almost immediately, and then just didn't stop going down. Yeah, kept going down. Sold off. It's going to continue into this next week. I don't know. It's a question. We have to see. I'm saying for next week. Look at where the Chinese are fixing their currencies. That's key. It'll be key to see whether they're thinking that it's going to continue. You know, they're in a bit of a paradigm now where they're kind of a bit stuffed, really, because if they help the markets, it looks really weak. Like the markets are really weak, and it's also that they've been helping it so much recently, like lowering interest rates constantly and doing this constantly, and it's not really helping. That, you know, people have lost faith. So every time if they do something, then it's like they're acknowledging it's bad, but you don't have the benefit of them helping, you know, to the markets. You don't have the benefit to the index, the Chinese index, of the Chinese helping, government helping. You just got pure negativity because people don't trust the Chinese government to solve the problem. Well, not trust is a bit of a jump in terms of the markets. Anyway, you know, Chinese have a lot of strength. They have a lot of cash, a lot of coercive ability to say. You know, they can still help, but losing faith. If you see it sail off, lows down here are not unreasonable. I don't think. These are 3 Bollinger Bands as well, 3 standard deviations. Rare we ever get it this far. If you look back, it's very few times. You know, we're going back. This is 2014 here. You know, and there's only over 2 other times. One of them was like a month ago. No, sorry, more than a month because time flies. 4 months ago. The other one was a year. Yeah, pretty much a year. Over a year, 2 months. So it's quite big moves. Yeah, Renminbi's going to be recap. So yeah, that's just a quick video. I felt I should do one. I haven't done one in a couple of weeks, but it's just, yeah, it was really quite quick. Ask questions and comments. I have to say I'll get back to them tomorrow, and I'll be doing a morning post tomorrow as well to do the news, so it's a bit clearer and everything. Just help with understanding and that. But I hope you enjoyed the video and that. Yeah, I hope it was all alright. Yeah. I usually end the videos by saying good luck trading next week, but I ended this week by saying be very prudent. be very aware, look at everything. It's not sure which way it's going to go. You know, we could literally see it open and everyone's got over China. Sometimes that happens. They just get over China. Well, they don't just get over China. They just get over whatever's negative and it just booms back up. So it's not an easy, just go back next week, start shorting again. Then again, it's not an easy, thing, go get back long. So just be aware, be prudent, be safe. Yeah, and I'm hoping to get some difference anyway. That's the main thing. So yeah, that's all good. Yeah, if you have any questions, comment, please leave them. Yeah, good trading. See you later.